Hi, everybody. Good evening. Great to see everybody out here tonight. It's funny, I drove in from the Valley. I moved to the Valley. I'm a city girl. I'm from Halifax, from Bedford, but I drove in from the Valley, and it was 33 degrees and just stifling. So it's actually as much as I think some people are going, why isn't it as warm as Alyse said it was going to be on the news this morning? It's kind of nice because I think other parts of the region right now are like, get me out of this heat. So thanks for being here. I am Alyse Hand. I co-host Global News Morning. It's a morning news show here in Halifax, 6 to 9 a.m. on Global News, if you're able to tune in weekdays. And I've been in the TV and news industry for about 15 years now. I've known Clinton Wilkins for the majority of that time. He's become a dear friend of mine. And I've been moderating this event, I think, for about 3 years now. I think this is our third one. We were sidelined because of COVID, but we're back and better than ever in this new space. So thanks to everybody for being here for Pride in Home Ownership. We're going to have a great discussion tonight. And I'm going to introduce you to our lovely panelist to the right of me here. I'm going to start with Clinton. He is the founder of one of Canada's top performing brokerages and is the current Canadian Broker of the Year. He's a big deal. He is, and that's for under 25 employees. He began his career as a mortgage broker back in 2006, and with the goal of providing a better mortgage experience for clients and supporting Atlantic Canada's growing economy. Clinton has always been a forward-thinking professional and a great friend, too. And when Clinton is not working in the office, he can be found co-hosting Mortgage 101 on City News 95.7. He's also a regular contributor to our morning show on Global News Morning. You might see him on there, and CTV's morning show as well. And Clinton literally wrote the book on mortgage lending. He wrote a book when what were you, like 14 at the time?
Might have been a couple years ago. I don't know.
Confessions of a Halifax Mortgage Broker, and it's a great read, and it's still something that a lot of people go to for information when they don't go to Clinton himself. So when Clinton is not working in his office, he is doing all sorts of things. I know I see him all around the town and giving back and philanthropy, and this is one of those things he chose to do tonight, was give up some of his time after a day at the office to speak with us all. So Clinton Wilkins, everybody, give it up.
Thanks for coming. And thanks, Alyse.
Yes, of course. And Danielle McLean is right here to the right of me. Danielle is the owner of DCL Law. She's originally from Florence, not Italy. Florence, Cape Breton in North Sydney. She's our resident Cape Bretoner on the panel today. She's a graduate of both St. Mary's University and Dalhousie University. She was admitted to the Nova Scotia Bar in 2004. Her legal practice includes real estate, how appropriate, wills, estate planning, contracts, and corporate law. I was listening to Danielle. We were on a call to kind of preparing for this the other day, and I'm just like, this. It was amazing. The wealth of knowledge that this woman will be able to provide you tonight for free is incredible, and she's just great. So Danielle, thanks for being here.
Yeah, thanks for having me.
And finally, Jules Chamberlain. You're the last one there to get to, Jules. He is a real estate agent at Red Door Realty and is fluently bilingual in both Anglais and Francais. He hails from Bathurst, New Brunswick, in northeast New Brunswick, and he returned to the Maritimes after living, get this, in rural eastern Ontario and Ottawa, with bouts in Montreal, Toronto, Boston, and Paris. He's a bit of a world traveler, so he's seen it all, but it's so cool to know that he came back here to kind of lay his roots. He has been working in real estate for over a decade now, but before that spent more than 2 decades, more than 20 years designing and renovating homes, so he really is the full package. He knows it all. He brings this knowledge of both the decorative and structural aspects of a home with him when evaluating any property. So give it up for Clinton, Jules, and Danielle, our panelists this evening. And we're going to get in right into the questions. We've got lots of them that we've kind of spent some time together thinking, what would be the questions that others would want to know, but we are going to leave some time tonight for you to ask some questions as well. So if you have any or you start to think of some, just keep them in your mind, and at the end of this session, we will give you the opportunity to ask some questions. So first question, and this is for all of you. So Clinton, I'll start with you.
Okay, perfect.
This is a tough one. Tell us a little bit about yourself.
Ooh. I love all the trick questions. I mean, Alyse is a professional interviewer. We're just, amateurs, maybe on a stage, but maybe professionals in what we do every day.
You sure are.
I've been a mortgage broker here in Halifax. I'm born and raised Nova Scotian. I've been in the industry for 17 years, and I've overseen almost 5,000 transactions. So every day I think I've seen everything, and then I see something new, which I think is really cool. And I think over the last couple of years, there have been such a big shift in talking about home ownership and real estate and mortgage lending. And you know what? I'm glad that at least we're part of that conversation. And I think home ownership really is more important now than maybe it ever has been, and especially over the last couple of years. Like, everybody's needs and wants have changed. And I'm glad, we've been here to be able to help people that live here in Halifax and Atlantic Canada and really across this country.
Great. Jules, I'll hand it over to you. Tell us a little bit, other than what I said there's lots more to Jules. So tell us about yourself.
Thank you. I originally was going to come here to study in architecture way back when I was 16 years old. I came to visit Halifax, and somehow life took me elsewhere, and I ended up in Ontario and living in Ottawa. And I did a lot of other things other than architecture for a while, and studied business, and I'm a people person. Got into food, into group dynamics, and a variety of different things and then came back to construction and did that for most of my adult life in Ottawa and the Ottawa Valley. But all those years, I knew I would come back to the ocean. And though I had community and home and career and friends up there, one day, as planned and expected, I woke up and it was like, oh, time to come back. So Halifax is home. And I love it, and I never thought I would get into real estate, much as I love buildings, construction, architecture, design, and especially interiors. But it just seemed like the natural succession to what I was doing. So this is semi-retirement. There's still yet another career in me yet, some years away.
I'll be introducing you again in a few years in a completely different capacity. No,
we already have a lawyer.
We're glad you made here home because, you have so much knowledge, and we're glad you're here this evening, Jules. And Danielle, tell us a little bit about yourself before we dive into some more questions.
All right. Well, I am not as interesting as Jules. I'm just a lawyer.
I think you're kind of interesting.
In my spare time, I like to drive my children to sporting events and try to sit on a stool in front of crowds in a dress. I've been practicing real estate law almost exclusively for close to 20 years. And what I would like to see everybody take away from this is that home ownership is possible. It just may not look the way you think it traditionally has looked.
Good way to kind of start things off, and we're going to dive into that for sure here in a second. And for all three of you, and Clinton, we'll start with you again. If someone is thinking about becoming a homeowner, let's just start here. Where do they start? What's the first step?
Well, I might be a little bit biased working in the mortgage industry, but I think a really good place to start is getting a pre-approval. Knowing what you can afford, knowing what the mechanics look like, I think is really important. And I think you really need to understand, what your budget is, and you need to know how much, funds you need. And I think it's a really good foundation. And typically, majority Canadians need a mortgage. So, if you can't get the mortgage, and if there's certain nuances that may impact that negatively, I think it's a good place to, start in a good foundation. And we see a lot of people kind of starting with getting that pre-approval in place.
I can attest to that. Yeah, for sure. And then Jules, first step.
Absolutely, actually, yeah. And Clinton didn't nudge me to say this, but that is the first thing that I would say is get a pre-approval. Then we can work in a realistic range. You know where that ceiling is of what we can look for. It's heartbreaking to look for a place, fall in love with it, and then find out you can't afford it. So it gives us a range of what we can work, where we can work, what we can look for, and then get a good realtor. Find somebody that you're going to be comfortable with, because you're going to be spending a lot of time. You're going to be spending a lot of time looking at stuff, and somebody that can be sensitive to your needs.
Yeah.
And then the next step.
I'm the last.
This is a natural segue, I guess.
I'm the last step. But I would say if from the beginning, in addition to kind of getting your people lined up, you really want to figure out what it is exactly that you want. And we had a conversation the other day about this and about the difference between a want and a need, and how important it is to understand what you really need and what you would like to have. So I think that's important as well when you're kind of starting out.
All right, great, guys. So we're getting the conversation started, and this is all about pride in home ownership. It is Pride, everybody. So happy Pride to everybody attending. I'm a cis white female, and so when I sort of first found out about this, I went, "What? There's challenges if you're in the queer community for buying a home, and what are those?" So I want to start with that question because that's really what we're here to talk about, and then we'll break things down further. But and maybe I'll start with you. I know I've left you to do the third answer every time, Jules, or excuse me, Danielle. I'll start with you. What challenges do you see for the LGBTQ plus community in this area?
Well, I think everybody right now is having the same challenges, or a lot of the same challenges. And if you listen to the news and you're reading the paper, there's a lot of sensationalism in there. And homes aren't attainable; they're not affordable. The average house price is these competitive bids, and I think part of that, I think people stop themselves before they even try to get into the game, and they assume that they can't. And part of what I'd like to talk about a little bit later on, and some of the other questions are, how it can look and how you can make that happen. And it may not be what we traditionally think of with a married couple going and pooling their resources and buying a house.
Yeah, great. And Jules, I'll let you answer that one.
It's hard to say what would be the specific challenges for our community in particular, because buying and owning a home is not specific to what we do in bed or are specific to our identity. There's, like Danielle is saying, is that there's challenges for everybody. I'd say the first challenge is what separates renters and owners is that big hurdle that we know is the down payment. And for those of us who, once you have a mortgage, once you have a home, we all adapt to whatever our expenses are every month. Once we're in a home, it's the same thing, we adapt. It's not that different, but that big first hurdle is the first big challenge. And that requires whatever organizing or whatever it takes to squirrel away, sock away, organize your life to be able to make that step forward.
Clinton, I'll get you to answer that one too.
I think for me, I see a lot of single individual borrowers, and it may be just one borrower on an application. And I think one of the biggest challenges that I see right now is around, the household income. Because obviously the cost of real estate is more expensive now than it has been over the last couple of years. You need more income now to qualify kind of for an average home than you did before the prices started increasing. So I really find income is kind of the biggest challenge that I see across the board. In the queer community, I think there's sometimes some socioeconomic challenges, or maybe that idea that there's socioeconomic challenges. But I can tell you, we see borrowers every day, and the incomes are actually pretty strong here in Halifax. I will echo what Jules said, down payment is a hurdle. I don't find it the biggest hurdle, though. I would say the biggest hurdle is the household income, and I would say secondly, the next hurdle is really around the credit worthiness, and really, I think, education around credit and financial health and things like that.
For me, and I bought my first home, a condo, a couple years ago. It was just knowing where to start. Like, what's the? You just like kind of have to Google it. What do I do? And I want it. So, and I mean, the mortgage broker avenue is what I did. And again, Clinton did not ask me to say that. That's just the route I took, and it worked out. So, good stuff, guys. We're gonna keep it rolling here. I know we only have about 45 minutes to go here. So, Danielle, I'm gonna ask you the next question. What are the pros and cons of joint tenants versus tenants in common? Maybe you can break that down for us a little bit and just tell us what the pros and cons of each one are.
Okay, that's a big question. So this would be when you've already got your accepted offer and we're closing your transaction. So your lawyer's going to ask you, if it's not just you purchasing, if you're purchasing with somebody else, how you want to take your title. So there's different ways to do that. So one would be joint tenancy. So that means if one of the owners dies, whoever's left is going to get the property automatically. So you don't have to deal with wills, inheritances, anything like that. And we'll see that a lot of times when people are partners, so romantic partners. So you want to make sure that your partner is going to get the property. Tenants in common means that you each own your own share. So it doesn't have to be 50-50, it could be something different. Maybe you're buying with a friend, maybe you're buying with a partner, but you want to keep your assets separate. So it could be if I contribute 25% and Jules contributes 75%, perhaps he's a 75% owner and I'm a 25% owner. That can work really well if you're doing something with someone that you're not in a romantic relationship with, sort of like more of a business type transaction, or if you just want to make sure that your investments are protected. Now, the danger of the tenant in common situation is if I pass away, then Jules is going to find himself owning 25 with someone with 25% share that whomever inherited my estate. So you need to kind of remember that. We can play around with that. We can do some side agreements. We can do some trust agreements. There's ways around all of that. The only caveat I would have there would be sometimes lenders are going to dictate how you hold title. So we'll see that frequently where a lender will say everybody has to be joint tenants. And that can be a problem because sometimes people are just adding on a parent so that they can qualify. Kind of speaking to Clinton's saying there, you know, with the household income, I'm seeing more and more now that we need to add on parents, friends, whomever, so that you have that income. And they're really just there for qualification purposes, but your lender's requiring that you be joint tenants. So if you pass away, that person that was just there for qualification purposes is going to inherit that property. You might not want that, in particular if it's just you on title and you've got a partner or someone else that you want to get that. Again, we can always play around with that, and those are discussions you can have with your lawyer. There's a way around everything. That's what I'm there for. But we can do
And
a
really
lot
know
of
what you
side
want, I guess.
agreements. You know what you want going in, and make sure your lawyer knows what you want, and make sure that someone's not just defaulting you to something that you may not necessarily want. It's in particular when you're looking at not everybody that you want to own the property being on title. It's really important that you have those discussions.
Okay, good advice. We did our little pre-call for tonight. This next question came up, and I know there was a little bit of like, how do I answer this one? But I'm going to ask it to you, Jules, and I really don't know. I really don't know what you're going to say here tonight. But what neighbor?
I get all the trick questions.
Or maybe the hard questions.
The
I
hard
don't know.
questions. We know you can
I
handle
get the
them.
legal questions. Come on.
That's right. She gets the really tough one, Jules. What neighborhoods are most inclusive? Are there more inclusive? Like we're in Halifax, maybe
I
in
knew
Toronto.
that one was going to
but-
come up.
Okay.
So that's a very difficult question to answer without sounding disparaging of other neighborhoods. It's 2022. We have come a long way. So things have changed a lot. Rather than, I'll generally say anywhere that is more younger, happening, hip or up and coming are the areas that you're more likely to see more diversity and more openness. But then I also want to say you have to go on a one-on-one basis when you're doing viewings, when you're shopping, when you're going through that whole process of elimination to arrive at the right place. Have an eye. Check out your environment. See what the neighborhood is like and what you see in the neighborhood. Sometimes there's signs that just go, oh, maybe not here. But I'm happy to see that we have come a long way.
And I think it's such a word of mouth thing too. We're in Halifax, it's not Toronto, so you just talk to people and you kind of know if you've lived here for long enough, I guess, where you might want to go. Yeah. What about you, Clinton? You're kind of looking at me. Do you have something you want to add to that?
I don't know. For so long we were saying like the north that is the hot spot to be.
Yeah.
But
That's where I am.
It is one of them.
I mean it is a hot spot.
Yeah.
But I'm seeing so many buyers, even like a lot in the queer community that we represent, are buying homes in Dartmouth, like downtown Dartmouth and North End Dartmouth is like super hot. I've actually lived in North End Dartmouth myself, and I think it's a pretty good place to live. We're from other Dartmouth residents here.
Nice.
But I'm seeing a lot more popularity there.
Yeah.
And I would even say the last couple of years, we've seen a lot of price growth kind of in that Dartmouth.
Yeah.
Between the Cirque and the Buy High seems to be the
Absolutely.
the
Yeah.
kind of the biggest.
And on the peninsula here, I'd also say, like, it's because typically people, there's actually 4 zones. Most non-realtor people wouldn't know this. There's 4 zones on the peninsula. So most people consider anything north of Citadel Hill as the North End. But really, there's a whole neighborhood there that's called Central Halifax. And so the central area, so around Hollywood or you know, where Gottingen and Agricola, right? That whole area is very hot and fabulous place to live, actually. And you'd have me as a neighbor.
And you'd have LF Bakery in your neighborhood
Yes.
too, which
Yeah.
is
I mean,
amazing.
who doesn't like a nice little
And
treat?
dangerous.
Yeah.
Take it from me. Okay, Clinton, what advice do you have for someone looking to get pre-approval?
Oh, have your documents together. That was my number one suggestion. You know, if you're employed with an employer, you know, have your pay stub, have 2 years of your T4s. If you're just starting a new job, you know, have a letter from your employer to state what your salary is. So I think that's huge. And I would also say, my little pro tip for the day, download Borrowwell and download Credit Karma. They're free apps. One brings in the data from Equifax and the other brings in the data from TransUnion. Know what your credit looks like. Oftentimes, you know, there's little surprises on there, and sometimes there's errors that we are able to fix or able to help fix. But I think it's good to know kind of what your credit looks like and then have your documents together. I think that's huge.
Is it fair to say, you know, before you do anything, work on your credit before you go looking for a home, or do you think that's an afterthought?
You know, majority of Canadians have very good credit, but I think know what's going on. And I think, you know, if you've had bad history in the past, you know, maybe you've had some loss of employment, health issues, matrimonial breakdown, loss of business, pandemic, you know, EI. There are things that we can explain, and if it's a momentary kind of blip in that credit worthiness, you know, there's an exception to every rule, and we're certainly willing to work with people. And I think mortgage lenders in general really want to make it happen. Everyone on this panel, all 3 of us, we're all self-employed, so we really like to work with people, and I think mortgage lenders in general want to work with Canadians to make it happen. But I think know where you're at. I think that's the big step. Awareness.
Okay,
A
great.
little tale of warning, or a cautionary tale is the expression on that is pre-approval does not guarantee approval. So you want the pre-approval to know where, not to go into your field, but it reminds me of a story. Once you get your pre-approval, be mindful of what you do between the pre-approval and putting in an offer.
I.e., don't go and buy a new
Don't buy a
car.
new car.
Bingo.
Yep.
And maybe don't change your job. And maybe don't change your job.
No furniture
Yeah.
loans.
No.
Yeah,
And
I
make
had
your
a client
payments.
that without telling me, had gone ahead and leased a new car, and then we put in an offer, and she was shocked that she didn't get approved because her numbers weren't the same anymore.
Honestly, it would surprise you how many people buy a new car as they're buying a house. It would surprise you. It doesn't surprise me anymore, but it really does happen. I mean, accidents happen. You know, car accidents and things like that. And, you know, if it's a one-for-one trade-off, you really maybe not that big of a deal. But sometimes having new credit will bring down your score temporarily, especially like if it's a brand new loan at max. That can make a difference. So I would say keep everything the same when you make a pre-approval. Obviously, increasing your savings, not a bad idea, but don't increase your indebtedness.
Yes.
Bingo.
Great advice there, guys. It's funny. I'm in charge of the time. Clinton's like, if there's one thing you do tonight, keep us on track, and I didn't bring a clock.
That's all
So
right.
can anyone just give me a time check to see where we are? 6:30. Okay,
6:30,
we're
okay.
halfway through. Okay, so we should get to the next one. Danielle, we haven't heard from you in a while. What should people think about when they're thinking about cohabitation agreements? When should people think about cohabitation agreements?
You should think about a cohabitation agreement anytime you're going to cohabitate. That is the most valuable piece of paper that you will ever have, and your worst case scenario is that you never need it and you don't have to worry that someone's there for the wrong reasons. So cohabitation agreement can protect you, and it can protect your partner as well. So you can put anything and everything in there. So if you're looking at buying, you can say that the property stays yours, or you get your equity back. Or maybe it's just you on title because your partner's not going to qualify beyond there. You can also put in there that they do have an interest in that property. You can deal with anything and everything other than child support. So you can deal with spousal support. You can protect your pensions. You can say who's going to deal with debt. I always say, you know, paper makes good friends and it makes for good breakups because you know where you're going to be, you know, but we've all been there. And
I've been through a breakup or two.
Well, one of the hardest parts of that is not knowing where you stand. You know, are you going to be able to afford to stay in your home? Are you going to be able to afford to pay your bills? Are you going to get stuck with their debt? You've got that piece of paper, at least you know where you stand. So, you know, cohabitation agreements, they're our friends. Unless the person you're moving in with is really rich, then maybe not. But I can't. You should always.
But that wasn't legal
you
advice.
You should always have a cohabitation. You should always have a cohabitation agreement. And you know they can roll right over to marriage, so it's not something that's going to die if you get married. That's something, you know, and it's something that can be a hard conversation to have, but it's an important conversation to have. And you know, if somebody doesn't want to enter into one, you should kind of wonder why and maybe think twice about moving them in with you. But good tool to protect everybody, including the person you're moving in with.
And just to like throw myself under the bus a little bit and our listeners at home, so thanks for tuning in on Facebook or YouTube or wherever you're listening. I'm actually entering into a cohabitation agreement with my boyfriend. We've been working on like the legal document. We agreed on the terms. It's not executed yet, but I'm going down that path as well. I think having it on paper is so important.
Mm-hmm.
So important.
Great. I'm also about to move in with somebody, and we haven't discussed that yet. It's been one of those things where I'm like, I'm not ready to talk about that. We're kind of,
Paper is your friend.
so I've got to do that, and I needed that. Thank you, Danielle. Jules, are there any challenges with any neighborhoods and homeowners being accepted into the community? This kind of goes back to our last question. Yeah. Yeah. Okay, let's get another one for you.
Okay.
Or
Or do you want me to ad lib?
Yeah, go ahead. I feel like you have something to say.
Yeah, I'm usually a motor mouth. The buying a home is a huge undertaking, and so find the right team of people to work with you that understand and respect that. And like I said a while ago, find a realtor that you can work with because you're going to be spending a lot of time, right? Find somebody that's not just chasing after a paycheck or chasing after a quick sale. And don't buy a consolation prize. Be patient and find the right place for you, right? It's got to be, what you're looking for is good location, good bones, good systems.
You
The
can't
rest-
change the location.
No, you can't change the neighborhood. You can't, there's so much that, so of the things that you can't change, can you live with them? Of the things that you feel you need to change, what's it going to cost? And any address can have a brand new kitchen. There's a cost to that, but there's also an extra cost to buying one that has had a new kitchen put into it. So find something that's got, in a good location, that's got good bones and good systems, and then do the cosmetic. Do the fun thing yourselves, right? But don't buy a consolation prize.
Someone had said to me once, don't focus on the lipstick of the house.
No.
Yeah.
No. Too often lipstick is smoke and mirrors. So you need to look at it from a multiple angle of making sure that it makes sense structurally and it makes sense as an investment. For now, you need to make sure, of course, that you can afford it. But what's it like for later? Because at some point, you or your successor is going to need to sell it. So is that neighborhood going to allow for a certain amount of lift? Is the structure strong enough? Is it good base, a good canvas on which to paint your dream? Right?
Great. And, along with that, it's so important to talk to other people, to professionals and friends and family who have bought homes before, you have those if you have those, people that you can touch, reach out to and ask them questions, use those people, right? Clinton, do you recommend, this is a big one tonight, maybe one of the most important questions if you already are a homeowner especially, do you recommend a fixed or variable mortgage rate with everything that's gone on in the last few months and rates going up and up?
We've talked about this a lot.
We have.
I am a big believer in a variable rate mortgage product, personally. Historically, variable is better. I think everyone was probably surprised by the news that the Bank of Canada increased the key overnight rate by 1%. So everybody who is in a variable rate mortgage is paying 1% more today than they were prior to the last increase. But a lot of economists think that we may be in a recession type situation, by late next year, which might mean that the rates will start to soften. So if you take a fixed rate today, they're quite high. You're fixed for the period of that term. With a variable, it's going to go up and down. And I think we're close to where the peak is. we'll see what happens with inflation. There were some inflation numbers out here the other day, and Canada, our inflation is almost where it was with the U.S. So I'm cautiously optimistic. Right now, historically, about 60% of Canadians will take a fixed rate because they want the certainty. They want to know what their payments are going to be. But there's a cost to that. So first-time home buyers, it's a bit of a mix. I think first-time home buyers that have a little bit more room in their budget and they're willing to take a bit of risk, typically variable will pay off. But I think if you're right at the top of your budget, there's nothing wrong with taking a fixed rate and paying a little bit more to have that security.
Okay.
So I like variable myself, but it's not necessarily for everybody.
So it's not a one size fits all. It's, you got to talk to a mortgage broker or talk to someone about it. Danielle, tell us about the Matrimonial Property Act. What are a person's rights if they're not on title?
My questions are so big.
I know.
That sounds like a legal question.
I feel like I'm in law school, writing the bar exam all over again. So Matrimonial Property Act is exactly what it sounds like. So matrimonial. So if you are married or you have opted in to a registered domestic partnership with Vital Statistics, and registered is the key there. You have to formally go in to Vital Statistics and file this document. Then your property ownership is dictated in Nova Scotia by the Matrimonial Property Act. So that means that even if your spouse is not on the property title, they're going to have an automatic interest in the marital home. So where a lot of the misconception comes in is a lot of people assume that common law is the same as being married when it comes to property law, and you couldn't be more wrong. So I have people all the time that are terribly surprised, or happily surprised, depending on who I'm representing, that they don't have marital rights in property. So if you are common law, even if you file your taxes together, doesn't matter when it comes to Nova Scotia property law. You do not have that automatic entitlement to the property. So the starting point is if you're common law, whatever you brought in is what you get out with. If you're married or you've opted into this legislation, then you've got 50-50 at whatever you brought in and whatever comes back out. Now the problem is, and again, depending on which way you're looking at it, is if you're the owner of something and you're in a common law relationship and you don't have those cohabitation agreements and things fall apart, people can still argue equity. So they can argue fairness. So they can say, oh, look, I contributed more than a reasonable rent. I put in a down payment. I walked the dog. I watched your kid. I made you dinner every night. I rubbed your feet, whatever. So they'll try to quantify this. And then what happens is you end up going to court, and it costs you all kinds of money, and it's easier just to write somebody a check, and it's very frustrating for all of us. Alternatively, if you're the person that wasn't on title, you can find yourself in that terrible position where you're trying to prove that you did have an interest. Maybe you've been with somebody for 10 years, and you're arguing you had an interest. So, again, it's important to just have things documented, in particular if you're not both on title. But if you're planning on moving somebody in and you've got any kind of equity or skin in the game there, you really should have something in writing, just saying what's going to happen if you do split up.
That was a big question for you. Imagine if she'd asked it of me. I would have just
question.
said marry rich.
Oh, you too. Sometimes it's about
Couldn't
love.
It's hard because a lot of people, because you think common law, and I have people say this all the time when we're meeting to sign documents, they say, are you married? Because we need to know that for mortgage purposes. And people say, on common law. And, even from an inheritance point of view, if a common law spouse has no right to inheritance. So if you don't have a will and you've got a common law partner and they die, you get nothing. Their mom is going to inherit, or their dad, or their minor kids, or whatever. So it's really important that you have those discussions with your lawyer ahead of time, because we've had terrible situations where people have been together for 20, 30 years and somebody's passed away and they didn't have a will and they weren't legally married and they weren't entitled to the home that they've been living in. So,
And I see it honestly a lot in the queer community.
Yeah.
Like, relationships are different. Not everybody wants to go through the legal marriage. I'm glad that we can, but not everybody wants that for themselves. But there are legal implications.
Well, and even just the younger generation, there's not such a focus on marriage as there was. There's a lot more interest now in cohabitation agreements and prenuptials. Like When I started 20 years ago, you didn't do that, and unless it was maybe someone on a second or third marriage, there was a big swing in income. Now that is part of the conversations that people are having with me up front, instead of me kind of having the very unromantic conversation of, hey, do you have something together? But it is, people are a lot more open about that than they used to be. And again, I think that's, a lot of it is, it's the next generation coming up is much more aware and much less interested in marriage. So.
And more interested in protecting themselves, which they should be. Jules, when is the right time to buy? That's the big $1 million question right now.
3 years ago? No.
No, actually.
I vote today.
I want to say now, but actually it's more fair to say when you're ready. Line up your ducks, or whatever it is that you need to line up. There's no bad time to buy, but the important part is to be ready. And that could be today, or it could be tomorrow, or it could be next year. Because there isn't a bad time to do it, it's just important that you do it smart. Buy smart.
And I'll echo that, honestly. I think the right time is when somebody's ready. And I think it's ready, emotionally and financially. There's a lot of reasons to be ready. But I think, owning a home is typically the biggest asset in a household. So it's the biggest purchase. And for us, obviously, we think it's the biggest debt. You need to be ready to take that on. But the one thing I can say, if you do own a home and you're getting into that property ladder, typically your property is appreciating and you're paying down the debt. So your net worth is typically growing every month, which I think is pretty cool.
Yeah, I'll be honest, I refinanced recently and it was a really good move for me. So look at that too. If you have a home and you're, doing okay with the mortgage payments, think about maybe refinancing and you might find yourself kind of in a better position. I want to get to, because just looking at the time, we had some more questions, but I'm going to skip over them.
Yeah, I think we should get the audience.
And I want to get you guys involved.
'Cause I'm sure you guys have some questions, probably.
Do you have questions?
Oh, yay. Perfect.
Yay.
We're going to bring a mic over, just so our friends at home can hear you as well.
Oh, we're getting waved at.
Hi. Please be brutally honest.
Don't worry.
How much does a bankruptcy affect your likelihood for getting approved for a mortgage?
We lend people money one day out of bankruptcy. So typically what I say, and I'll answer the question, but I'll let you guys speak to it as well. I'm curious to know what the legal implications are. But one day out of bankruptcy, you can get a mortgage. When you're in bankruptcy, maybe more challenging. So when you're one day discharged, even if you don't have any reestablished credit, you can get a mortgage. But the one thing I will say, the harder the file, the more skin you need in the game. So the down payment might be higher, and you'll typically pay a higher rate. What we say, anytime that you've gone through something like a bankruptcy or a consumer proposal, we call it like the 2-2-2 rule. 2 years, have 2 new pieces of credit with at least $2,000 limit, and make all your payments, even on your cell phone, even on your student loan. Notorious, those are the things that we see that there's issues with, and keep it clean. That's my word of advice.
2-2 was a ballet reference.
Maybe not a ballet reference. So typically, one day out of bankruptcy, you're probably looking at like 35% down. And that can be saved or gifted typically. And believe it or not, we actually see a lot of borrowers right out of bankruptcy or a consumer proposal buying a home or doing a mortgage transaction. So it's actually quite common.
It's often more challenging, but it is possible.
Yeah, you're going to have, to Clinton's point, it's a more complex file. You'll have a more complex lender. There tends to be a lot of extra fees associated with that. You do have to be discharged, because until you're formally discharged, anything that you were to buy, the trustee owns until you've got that actual discharge. But anything is possible. It's not the roadblock that you're kind of led to believe that it is. Clinton's team does a lot of complex credit lending. They've got a broker here that does a lot of it, and I do a fair bit of that with them.
Great question.
It's a bus as they go by.
Oh, it's the pedal tour.
Oh, this is new. Okay,
I've
cool.
never seen that
Getting
before.
some story ideas for the
Is
morning
that like
news.
a drinking pedal tour? Like a wine?
That's amazing. Hey guys.
It's like free calories.
Happy
Now, hopefully,
Friday.
we'll keep your interest for at least another 15 minutes. So
Back to
we
that.
probably
Did that answer your question? Any follow-up
you.
questions?
Thank you.
Great question, and good on you for asking. Okay, anyone else in the crowd have any questions over here? That's awesome.
So just yell if I'm not loud enough. I'm losing my voice a little bit. So for first-time home buyers, a lot of us have considerable student debt. What's your best advice for buying your first home when you're also making, pretty substantial student loan payments?
In terms of qualification, I often see people who try to speed up paying their student loans down, or like speed up making the payments, so increasing your payments. Getting the debt paid down faster isn't necessarily the solution. It's really about the monthly liabilities. So I would figure out what the minimum is that you need to pay on those student loans, and that's typically what I would set it at while you're buying a home. And then once you own the home, then you can speed it up again. I have a lot of buyers that are putting $1,000 a month on their Canadian student loans when their minimum payment's $300 a month. That makes a big difference when we're looking at qualifying. So that's one thing to take into account. And if there's any revolving debt, so a student line of credit, we will take 3% of whatever the remaining balance is. So if you're looking at paying out any debt before you want to go buy a home, it's always better to pay out the revolving debt versus the installment. So an installment would be something that you're making a regular monthly payment. Revolving is something typically like a line of credit or a credit card. Hopefully that helps.
Are you more focused on making the mortgage payments, or kind of how you would look from a qualification point of view? Yeah. Have you thought about maybe co-ownership? So that's something I'm seeing more and more now, like people kind of friends buying together. We could do a little partnership agreement and kind of detail how things are going to look. Then you have to come up with half the down payment, and you look twice as good on paper in theory if you've got and you've got half the payments.
And sometimes we see 3 and 4 borrowers on a mortgage application. I'll be honest with you. I had some borrowers that actually just closed on their home, and as a matter of fact, Danielle may or may not have been their lawyer. And 17 years ago, there were a lot of questions.
Yep.
If there were 2 men on an application or 2 women on a application, imagine a non-binary person on an application. There were a lot of questions that the lenders and the insurers would come back and ask us. And now it's so much more normal that we can have 3 single people on an application. And I think the risk that the lenders thought, they're like, well, this relationship, whether it is a romantic relationship or not, is going to break down and put the lender at risk. But I think even outside of Atlantic Canada, the homes are just so much more expensive than they are here. It takes sometimes multiple borrowers to be able to qualify. So it's becoming really much more normal from what I'm seeing.
I'm seeing more and
Likewise.
more. Yeah, I'm seeing more and more of that. So it's just something to think about if you have a roommate or something and you've got the down payment there. The other option would be to look at something that has a rental suite in it, so you could have a little bit of rental income in there to kind of pad it a bit for you.
And it's really great to pay down your mortgage. I've actually owned a multi-family before where I've lived in one unit and I've rented out the other 2 units. And I was almost living for free. It doesn't necessarily really help with the qualification because we only use 50% of the rent towards your gross income. So it'll help a bit, but just on a monthly basis, it's such a big, big difference, which is kind of cool.
Yeah.
If that's really where you want to be. And I think it kind of brings back to me like what a first-time home buyer really is. And I think the needs and the wants have changed a little bit, I'll be honest with you. And I know I may be going a little bit off topic, but a lot of first-time home buyers today are trying to buy their dream home. And I think we're kind of shifting back to maybe more of that starter home type situation just because of what's going on with the price. But and a lot are asking, are the prices going to go down? And I think this is kind of the new normal. So we're working with what we have. And I think things are going to start plateauing until we get a lot more inventory on. I think we're going to get back to more of a normal market. And maybe, Jules, you can speak to this. But in Halifax, we traditionally have seen like 1%, 2%, 3% growth. It's been obviously double-digit growth the last couple of years.
Yeah. It's not been a bubble. It's been more of an adjustment. Nobody has a crystal ball. We don't know what's going to happen. We don't know what's going to happen in the world altogether. But the anticipation is that prices may plateau, but we're not expecting them to drop because we're still affordable in relation to other places in the country. To the starter home aspect, I would say start realistic, and start building equity. And, then later you can either use that first home, that starter home, to start a portfolio if you feel like being a landlord and you have that opportunity to do that and buy a second one, or you can then use that equity to buy your second home and then, you know, work your way up. If you aim for the dream home too fast, you might
Sometimes you just have to wait.
Yeah.
And I think
Yeah.
waiting, there's something wrong with waiting, but I think the people who are waiting, that have waited now 2 and 3 years, some of them are kicking themselves and they really
Yeah.
wish that they would have pulled the trigger in like 2019 or 2020, because the rates are a little higher now, but also the cost of the real estate obviously is higher too.
We don't have a crystal ball for the future, but you know, when we look at stats over the past many years, even decades, we're fortunate to be in a city and in an area that has a mixed economy, and we basically have a stable ripple that equates approximately 3% year over year, decade over decade, right? That's a way more fortunate situation and something that we can work from and anticipate that it's much more stable.
Yeah, like we
And
haven't had the boom and bust, which is kind of cool. I'd love to get some more questions. I know we only have like a few minutes
we
left,
are
but
running a little tight on time. Did that answer your question? Any follow-up questions? Are you good with that? Yeah, she's saying she has a partner and they both have student loans. So if she was to do the cohabitation thing, she's still kind of SOL. So, I mean,
But, you know, I think sometimes it's really the income and the indebtedness. It's not just the debt. I think really look at the payments. I think the payments are really what you need to think about. And if it's amortized over a longer period of time, that will help. So I think there's definitely maybe something there. And I think having 2 incomes certainly does make a difference.
okay, great. Any other questions before we kind of get to some rapid fire questions from the panel? This is your chance. Any takers? Okay, thanks for your questions, guys. We've actually answered quite a few of them already in just our conversation, so I'm going to dive into this 4th rapid fire question, which maybe I'll start with you, Clinton, on this one. I think you or Jules or Danielle, would you recommend the Nova Scotia Down Payment Assistance Program? Maybe Jules, start with you here.
Well,
And what is it? And what is the Nova Scotia Down Payment Assistance Program?
Yes, well, it's assistance if you qualify. So the first thing I would say is look into it. It's there. It's available for certain people. There's a whole. It's easy to look it up online on Google. There are criteria for eligibility, right? And it's a loan that is 10 years?
Yeah, it's a
I think.
10-year interest-free loan. And you know what's really cool? The province of Nova Scotia, you know, we're right across from Province House here at 5151 George. They extended the program for Nova Scotia. It used to be in Halifax, you can only qualify to buy a home at $300,000. And let me tell you, there's not too many homes at $300,000 right now. They've increased the limit to $500,000, and it's a 5% interest-free loan. Yep. Over 10 years. It basically turns into a second mortgage, and the household income can be a maximum of $145,000. So $145,000 household income can definitely qualify for a $500,000 purchase, and that's the 5% down. You cannot have that money available in terms of savings. So if you have savings, you can't do the program. It's for people that don't have the savings for the down payment, but they have enough maybe for the closing costs and stuff like that. Yeah. We're seeing more now because it's been obviously extended to that $500,000 range. The one word of caution is it may increase your legal fees, and not every lender will entertain that program.
Yeah, the other thing with those
Gets
loans is
complex.
they are interest-free, but there's still a cost.
Still a payment.
So when you pay it
Still
off,
have to pay it off.
when you pay it off, they're going to look at the equity that you have from the date that you purchase the property. So if you purchase for $300,000 and when you pay it off, whether you sell it or you refinance or you just come up with the cash and you can pay it off at any time. But say when you pay it off, the house is worth $200,000 more. You're going to pay, if you borrow 5%, you're going to pay back 5% of that equity. So they're great to get your foot in the door if you don't have that down payment. And even though it sounds like it's interest-free, it's something that you should really focus on paying off when you can. So I say to my clients, when you get your tax return back, throw it on that. Get rid of it quicker, because if you're in an area that's going to have those big equity jumps, it may end up costing you an awful lot. But fantastic to get your foot in the door if you don't have those big down payments that you need. It is a second mortgage, so there is a little bit more of a cost there because we're doing two separate mortgage transactions. Most lawyers, I think you'll find, will give you a pretty good break on that because we're already in there meeting with you.
And there's actually 2 programs, which is kind of interesting. And I think this is something interesting to note. And I think if you're buying your first home, this is both for first-time home buyers. The province has their program, which is the
Yeah.
down payment assistance. And the federal government also has a program. Now, they can't be mixed. It's one or the other. Let's say that you do have money for the down payment, but you want to have a bigger down payment. As long as you have the first 5%, whether that's saved or gifted, the federal government will increase the down payment as well, up to 10% for a resale home and up to 15% for a new construction. And the federal government recently, they put a cap.
Yeah, I don't see a lot of those. Do you
Not
do
as
a
many
lot?
now.
I don't see many of those.
And
I've
I
been
think,
seeing a
especially
fair bit with
in
the
an
Nova Scotia.
increasing, value environment, I think that people are a little bit gun shy on programs where, the federal government may be in bed with you, so quote unquote, with a piece of the ownership of the house. So I think people are a little bit apprehensive, but I think we're going into a period where maybe the values are going to level off, and it might be a good program again.
Yeah,
So
good point.
certainly something to think about, and there are funds available out there to either help you with the down payment or to increase the down payment, which I think is kind of cool.
You just want to give yourself a little bit of time if you're going that route too, because I think you have to go physically down into the office, Nova Scotia. You have to produce actual paper.
Real documents, like pieces of paper?
It takes a little.
They need a
bit
letter from your
longer.
mortgage lender.
Yeah, so let your realtor know if that's something that you're looking at, so they know to build in a little bit more time in there for your.
You're
fi-
probably
for you to
not
meet your
closing in 2
financing
weeks.
condition. No, please
yeah.
don't try that anyway. That makes your lawyer sad.
Yeah. Time management for sure, and trying to do that ahead is always best. We only have a couple minutes, so I thought I'd end it with a couple questions that I thought would help our audience, both here in person and at home, the most, which I want to ask you, Danielle, and maybe you can both answer as well. How do you know when you have it? Like, how do you find a lawyer? How do you know who's good? And the same goes for real estate agents and mortgage brokers. How do you really know how to find the right one?
I think 90% of my clients would be either repeat business or referrals. So, ask somebody that bought a house. Did you like your lawyer? Did you hate your lawyer? A lot of times, like a lot of my referrals will come from my realtors, my brokers, people that work with me. Find somebody that you're comfortable with. I would say with real estate law, find somebody that focuses on real estate law. It is not an area that anybody should dabble in. I consider that kind of the equivalent of going to, a doctor for a toothache. You should be going to a dentist. So,
Go to the professional.
Go to the professional. Make sure you have somebody that's experienced in there. Click on, read their bios, that sort of thing. There is an association. There's the Nova Scotia Real Estate Lawyers Association, RELAND. So if you go on their website, they have a lot of Nova Scotia lawyers on there. So I would suggest kind of starting there to find a real estate lawyer. Or you could just call me. That works too.
Yeah. Likewise, over 90% of my business comes through referrals. Talk to people that that have worked with people and ask them if they say, oh, this person's is great, ask them how or why, ask them how their transaction went. And that'll help you identify, right?
You can interview. This
you
might be
can
common now.
interview.
You can bring in a number of real estate agents. They are working for you, right? So bring
Yeah.
them in, talk to them, ask questions. You can go online. There's a whole
And
list of Google questions you can ask
don't-
potential real estate agents.
And
right?
don't be shy to enter into a contract with a realtor because you're retaining them to advise and represent your best interest. And actually, when I sign on, it's my job to follow your legal lawful instructions. I'm there to advise you and to help you and guide you and all that stuff, but you're the boss. So it's not actually a scary contract. If after a while it doesn't work out, you can actually break that contract. So, it's just if you're hiring a professional, whether that's a lawyer or any profession, if you retain them, then you're also hiring them to fully give you all that advice. They pay for errors and emission insurance, all that stuff. They're there to fully represent your interest and guide you through all that. So.
Clinton, I'm going to let you have the final word since this is your event. I just think the bottom line, I think I might have asked you this when I did my very first TV interview with you, is why, should someone go with, say, a mortgage broker over the bank? I think that's the big, what's the benefit of going with someone like you over RBC or BMO or whatever?
Well, Alyse, there's mortgage lenders and there's banks and credit unions on every corner. And I think the big thing that sets us apart from maybe the bank branch is this is the only thing that we do all day and every day. Maybe some of you do work in bank branches right now. I know, there's bank branches just a couple doors down from here where our office is actually in an old bank branch. So banks are really our friend, but we're not doing credit cards and loans and bank accounts every day. We're just doing that one widget, which is mortgage lending, and it's very, very complex. And in Canada, there's so many nuances to the different mortgage choices, and typically we deal with about 40 different lenders. There were some questions around credit and, first-time home buyers. Not every lender is the best fit for everyone, but we have access to a lot of different lenders. And we're doing this all day, so we can look at the assets, and we can look at the credit, and we can look at the income, and really give our expert advice on what the best way forward is. And for us, about 60% of our clients are repeat. So I think that really speaks to, the advice that they're given. And we really believe that we're in business with our clients really for the next 25 years. So we really do love the repeat, and we obviously love the referral. And I think mortgage brokers are now more important than ever, especially, we've just made it through a challenging time where a lot of us were stuck at home. We were still here and doing mortgage lending every day, some of us from home, some of us from the office, and we were still able to transact. And, I think that has a lot of value. We did some transactions.
Yeah.
And I always thought a common misconception is mortgage brokers are going to cost you more than going to the bank, but that's not the case. So you'll learn a lot kind of if you dig into it. I know, Jules, you've got one last thing to say. Yes.
Well, just a little word of encouragement, because it's so vast and complex, and that for a lot of people, especially first-time homeowners, it seems daunting, but it's also fun and really exciting.
I remember getting my first keys.
I love telling people that they're closed.
I know.
My new home buyers are so excited. I love it. The
We've
congratulations.
made a few dreams
and
come true, really.
Oh, yeah.
And
Oh,
come
yes.
through.
I had about 13 apartments before I bought my place. It took me until I was 34 to buy my first place. So it is a wonderful feeling if you can do it. It's something that not everyone can do, but you've certainly helped us all understand it better. And thank you, Clinton, Jules, and Danielle, for the knowledge and the advice tonight. Thank you so much.
Thanks, everybody.
Thanks, everybody out there in the cyber universe, too. And this will be online, too, if you guys missed anything or want to hear answers again. It'll be up on Facebook and on YouTube. Thanks, guys. Thanks for coming out. Enjoy the rest of your evening. Happy Pride.
Happy Pride.